Buying Geni at $17.61. Profit target exit equals $27. A 50% ROI. Hey guys! Welcome back to Wall Street Tactical. Today, we will look at Genius Sports Limited, a sports data and technology company that provides sports leagues, media companies, bookmakers with data management, video streaming, and integrity services. It's a big name in the field of sport, so let's take a look. Genius Sports is the global ecosystem's official data, technology, and commercial partner, linking sports, media, and betting. Their goal is to promote a more sustainable sports data ecosystem that serves everyone involved, from franchises to fans. They are a trusted partner to over 400 sporting organizations worldwide, recording high-quality data for several of the world's most prestigious leagues and federations, including the NFL, PGA, AFA, NASCAR, NCAA, FIBA, and EPL. Under the guidance of their CEO Mark Locke, they are driven to make a difference for their partners, from helping leagues take charge of their official data to providing engaging fan engagements for sports, media, betting, and companies. Mr. Mark Locke has been the Chief Executive Officer and Director of Genius Sports Limited since December 2020. You'll be surprised to know that their revenue has multiplied by 36.8% over the last year. And not only that, but it is also forecasted that it will grow at 24.1% annually. Its CEO owns 12% of the company. That is just the beginning. Let's take a deeper look at its stock and share and see what the future holds for them. Genius is also looking to extend its business by entering new areas in sports. Profiting from long-tail sporting events is a practical approach. We can get that figured out by looking at their stable share price. Over the last 3 months, Geni has been no more volatile than the rest of the US stock market, with weekly movements averaging plus or minus 9%. Volatility refers to the rate or degree of variation in pricing. The best part is that as volatility rises, so does the opportunity to make more money rapidly. The bad news is that increased volatility means increased risk. But with Geni's volatile rate, one can take that risk. To get the idea of their growth, it's time to look at their revenue versus the market. We know a company is doing well if it's earning a good income. Geni's revenue is expected to rise faster than the US market, which will expand at 9.2% per year. Geni's revenue, which is growing at 24.1% per year, is expected to expand at a rate higher than 20% per year. A critical aspect for any company is the stable cash runway. Based on its current free cash flow, Geni has a financial runway of more than a year. In a nutshell, cash runway refers to the amount of time a company can operate at a loss before running out of cash. During this pandemic, sports industries have also taken a hit, but looking at the forecasted annual earning of Genius Sports, we can say that there is good news. Annual earnings growth is expected to be 32.7%. The price-to-book ratio of Genius Sports Limited stands at 2.30. If you are new to this concept, the price-to-book ratio compares a company's current market value to its book value. The computation can be done in 2 different methods, but the outcome should be the same in both cases. For decades, value investors and market experts have supported the price-to-book. A PB value of less than 1.0 is often an excellent PB value, indicating a potentially undervalued company. Stocks having a PB value of less than 3.0 are frequently considered by value investors. If we look at the numbers, Genius Sports might not be doing well right now. At present, it is not profitable, but that is not the case in the future. As we say, the numbers don't lie. The predicted numbers, revenue seems flourishing. Genius Sports went public in April after a reverse merger with DMY Technology Group, a particular purpose acquisition firm. Since then, their shares have been volatile, but it now trades at around $16.50 per share, roughly a third below its late May peak. Genius Sports appears to have a bright future. What do we attribute a company's failure or success to when it performs well? It is the team, the management. Regarding management expertise, Genius Sports management personnel is considered a new team with an average tenure of 1.3 years. A company isn't great unless its employees are great. The board of directors is an essential component of the management team. That is, they are the ones that manage the company. The board of directors of Geni Sports Board has an average tenure of 2.9 years, implying a new board. These shares might provide a decent return for investors seeking a long ride. H2 Gambling Capital expects total gaming revenue to nearly double from $31 billion in 2020 to $59 billion in 2025. Institutions are already registered as shareholders in Geni Sports. They do have a sizable investment in the corporation. This indicates that analysts from those institutions have reviewed the stock and they like it. This brings us to the conclusion of our video. If you liked it, remember to subscribe to the channel, hit the like button, and share it with your friends and family. Bye everyone, till we meet again in our next video. Keep safe!